Hello, everyone. Today, we're going to break down the American market and take a look at a few instruments and highlight the key points that I hope will help you make well informed trading decisions. Let's get started. And today, we'll start with the Nasdaq. Looking at the monthly chart, almost nothing has changed since the last review. The price continues to stay near the upper boundary of the ascending channel. And as I mentioned last time, the continued decline as part of a correction to the previous growth is the most likely scenario for further movement. So far, nothing suggests continued growth, including the current trading volumes. Now, let's switch to the daily chart. Here, not much has changed since the last review. The price continues to fluctuate around the round level of $30,000, and the breakout from this sideways movement will determine how things develop further. If the price breaks upward and consolidates above the current high, I will expect the movement to continue up to $32,500. But if the price falls below the bottom of the sideways range, I will expect it to move down to around $27,000. But after that, I hope the asset will continue to grow. Since, in general, the overall picture hasn't changed, I am keeping my chart based expectations in place. So, for those who hold shares in their portfolio, I'll repeat what I said earlier. I think it's possible to partially or fully lock in profits and wait out the correction. I expect the correction to end in the range of $26,500 per share. But if buyers don't attempt to resume the upward movement at this level, the correction could go even deeper. It's quite possible to see the price around $23,500 per share. I consider buying or adding more shares at the current level to be risky. Yes, the price could go even further, but I consider that possibility to be minimal. Next up are Tesla shares. On the monthly chart, the price is moving within an upward trend and continues to trade around $400 per share. The levels and trends from the previous review remain relevant. Based on the volume, everything points to the asset's price continuing to rise in the future. Although buying does not currently dominate, I also don't see any significant selling. It's quite possible that the trend will have to be redrawn like this in the future. In that case, I think it makes sense for the sideways movement to continue until it reaches its lower boundary, after which we can expect growth to resume. The key barrier to further growth of the asset is the $490 per share level. If this level is broken through, then I will consider the global target for the asset to be $750 per share. Let's switch to the daily chart. In the previous review, the price dropped below the current minimum, and I mentioned that this move was not supported by selling volume. After that, as we can see, the asset shot up and continued moving sideways. But again, I want to point out that the buying volume is still not enough to support further growth, which confirms my suspicion that the sideways movement will continue until it reaches the lower boundary of the global upward channel. Only after significant volume appears in one direction or the other will it be possible to talk about further targets for the asset. So I will refrain from making any new chart based predictions. In general, despite the current chart showing a local decline, the volume situation suggests that growth will continue in the future. So, for those holding shares, this movement of the asset still doesn't provide a clear understanding of the nearest targets. But as I said, the volume data still points to growth, which we will expect from the lower boundary of the current upward channel. It will be better to buy or add more shares after buying volumes appear and the movement is confirmed. Next up is NVIDIA stock and its monthly chart. The trends and levels remain relevant. I don't see any major changes on the chart. The price reversed from the previously indicated range, dropped back below the level, and is currently testing it again. The volumes confirm the start of a downward movement, and as I mentioned in the previous review, the target of this reversal is most likely the next level in the range of $170 per share, where we will assess the player's efforts and make new decisions regarding the asset's targets. I do not expect the movement to continue within the upward trend. Most likely, the price will drop below its lower level and the trend itself will have to be redrawn. So far, all the data points exactly to this. Now, let's take a look at the daily chart. According to the chart expectations, the scenario for a decline is still playing out. The price has once again approached the upper level, but so far only to fill the previous gap. The volume situation favors the sellers. There are no significant buying volumes in the current movement, so I expect the asset's price to continue falling. If the price falls below the nearest level, then, as I mentioned earlier, the movement will continue down to the range around $170 per share. But if large buying volumes appear and the price is pushed back above this level, then it's quite possible that the upward trend will continue. But I consider this scenario to be unlikely. So for those who are holding this stock in their portfolio, I can't say anything positive at the moment. I expect the asset's price to continue declining. You should only consider buying more shares after there's confirmation of strong buying activity, which for now I expect to see in the range of $170 to $175 per share. Next up is AMD stock and its monthly chart. The levels remain relevant, but we need to add a level at the current high. Let's do that. The price keeps trying to continue its upward movement, but so far without success. Buying volumes are drying up, and most likely we'll see the start of a correction to the previous growth, which will probably bring the price down to the $400 per share range, after which I expect growth to resume. I'll mark my expectations on the chart. Now, let's take a look at the daily chart. Overall, the situation hasn't changed over the past 2 weeks. In previous reviews, I anticipated the start of a correction, but the price keeps fluctuating near the highs at the round level of $500 per share. The situation with volumes is debatable, and I can't say with absolute certainty that a correction has started, since I don't see any significant selling volumes yet. But for now, I'll stick to my chart based expectations. After all, this scenario still seems more realistic to me. So, for those who are holding shares in their portfolio, if the price drops below $500 per share, that will be a strong signal for a correction down to the $350 to $400 range. I don't recommend buying or adding more shares at these highs. So, that's roughly how I see things playing out. And if you think differently, let me know in the comments. And don't forget to like and subscribe to the channel so you don't miss future reviews. I hope this was really helpful. And remember, we can make predictions, but the market decides.